In this class, we will conclude the discussion of financial systems and technology by sharing with you 4 different topics. We will continue our discussion about the system, and the focus in this class will be on cash system and inventory system. And then we will make a summary by introducing what are the purposes of organization control or organizational control, because we introduce or we share with you different financial systems such as purchasing system, sales system, payroll system, and in this class we introduce cash system and inventory system as well. So what are the purposes of the organizational control to have all these systems in place? Last but not the least, I will talk to you or share to you the automated systems, because in the modern days, many companies, no matter they are big or large organization or the small or medium-sized enterprises, they run the systems in the computerized environment. So automated system is the last topic that I will share with you. So let's start to talk about the cash system. When we refer to cash system, we are sometimes referring to the banking system and payments into and from the bank account. So here, for the cash systems, it can be divided into 3 different systems or different interpretation. First, the banking system. Next is the payment system or payment into the bank account. And third is payment from the bank account. That is the receipts that we collect the payments from our customer. So we can divide into just the banking system, payments into and payments from the bank. And for payments and receipts, these are overlap with our consideration of sales and purchases and payroll systems. Let's recall what we discussed in another classes. We discussed about the sales systems, purchases system, and payroll systems. All these 3 systems are interlinked or correlated with the banking systems, because all our payments and receipts, a lot of them should be through our banking system or our bank. So for the sales, purchases, and payroll systems, all these will be considered for the payments, receipts, and that we discussed partly in our discussion for sales, purchases, and payroll system in another class. So let's make a summary of the payment systems under the cash system. For payment system, it means that companies pay their suppliers usually on a monthly basis. Supplier means, it's not just our suppliers, it includes our staff as well, because they are also the suppliers of their labor or their talents to the company, to the organization. So here, we pay, as a company point of view, we need to pay to our suppliers, including our staff. First step is to raise a payment requisition form or payment requisition by detailing the reasons why a payment is required. Here is the first step, payment requisition. And then the requisition and invoices are then submitted to the senior manager for approval and have to have the payment authorized. So there are basically 2 steps. First, we need to raise a payment requisition. From the purchases of goods, like in purchasing cycle, there's a payment requisition after receiving the invoice. For the payroll or the payroll system, the number of hours and the hourly rate, the information for these number of hours and hourly rate was extracted from the payroll systems, and the wages clerk or wages administrator need to prepare the payroll summary for requesting the approval on payment. So here are 2 steps we just mentioned in our another discussion, such as in the purchasing cycle and in the payroll cycle. And here we just put it all together under the payment systems into the cash system. And for the receipt system, it's generally described in the sales system or sales cycle, it means that the amounts may be received from the credit customers either by cash or directly paid into the company's bank account. So we got the payment from the customer into our bank accounts, and if the amounts are received in cash, controls must be in place to ensure that the cash cannot be misappropriated before it is paid into the bank. What does it mean? So, just an example. If we collect the receipts from the customer in cash, and the customer should put all the cash into an envelope and seal the envelope properly by signature over it as well. So once we got this envelope, including the cash, we need to have a proper control to open it and to bank or to deposit the cash into the bank account. First, we need to have at least 2 persons to open the envelope. One person is responsible to open the envelope. The other one is to monitor the whole process to ensure no one will take out the money and put into his wallet. So here we should have a proper control by opening the envelope, receiving from the customer. And once the cash taken out from the envelope, the staff need to count it, mark it down, and pass it through to the third person to bank it into the bank account. So the person put the money back into the bank account and got the receipt. And in the accounting department, the accounting staff or accounting clerk need to verify first for the envelope that our person signed on the envelope that how much that he or she received, and next to verify the numbers in the bank accounts, because the bank will issue a receipt for the cash received from the company. So it's a bit complicated if we need to have the cash received from the customer. But nowadays, a lot of the payment should be made directly to the bank account. So cash receipt is quite rare. And if it is the case, the cashier has to go through the bank statements in details and reconciles it against the ledger balance. So the cashier need to prepare the bank reconciliation because there's a 2 book. One is the bank statement or the bank book, or just bank statement. The bank statement is issued by the bank, and another item is the bank book, which is our bank ledger or our account record in the accounting system. I just call it bank book. So we have the bank statement and the bank book. The balances between bank statement and bank book is not the same. They can be different. So the cashier needs to reconcile all the entries in the bank statement with the bank book to ensure the reconciled ledger balance is consistent with the bank statement balances. Apart from the banking systems and the payment in and payment from the bank accounts, some companies have petty cash system as well. It's for their daily operations, and companies will need to keep a certain amount of cash on hand to pay for small expenses such as postage stamps, biscuits, taxi fares, and etc. So here is the amount is not significant. It's a small amount, but there is still a petty cash system to monitor or to have a policy, to have a procedures for the staff to follow how to manage and handle the petty cash. As staff claim against the petty cash system, they complete vouchers stating what the payment is for and attach a receipt to prove the amount. So just briefly explain to you for the petty cash system. The petty cash granted by the account department, for example, is $10,000. So for the department requesting the petty cash, say for example the HR, the Human Resources Department, they request 10,000 petty cash, and they use this $10,000 in the petty cash safe box for their daily reimbursements and expenses such as stamps, biscuits, taxi fares, or whatever. It's just tiny items, and they don't want to raise a purchase requisition on each of them, on each of the items, because the amount is too small. So it's for their convenience and more efficient to use this petty cash system. So once, for example, they buy a biscuit, say only $10, the staff purchase the biscuits with the invoice can be reimbursed $10 from the petty cash account or petty cash the petty cash safe, for example. So the Human Resources Department will give the $10 to the staff for purchasing the biscuits, and after that, with the $10 taken out from the petty cash for the petty cash accounts, is only left is $9,990, for example, and plus $10 invoice. So at the end of the day, say 5,000 used or expenses for purchasing small items. So the Human Resources Department will request the replenish of petty cash. So here, we just mentioned, at regular intervals, further cash is used and to replenish the petty cash which has been spent. And the supervisor will inspect the receipts and vouchers at that point. So let's, for example, $5,000 expenses, and the HR department will take these 5,000 invoices altogether. Maybe it contains 100 invoices, for example, and the sum of these 100 invoices is $5,000. So the HR department will put these invoices to the finance department to replenish 5,000 into the petty cash they kept. So after replenish the petty cash into the Human Resources Department safe, which is storing the petty cash, it will restore the petty cash balance back into $10,000. So here is the mechanism on how the petty cash system is running. So let's summarize. For cash systems, it can be divided into the banking systems, which are the receipts and payment systems, and also for the petty cash system. And next, let's talk about the inventory system. Inventory system is part of the working capital management system, but we seldom talk about the account receivable system and the accounts payable system. Why? Because the inventory system I will show here is part of what we discussed on the purchase system and sales system. First, we need to purchase of raw materials. Then purchase of raw materials is part of purchasing system, so it linked to the purchasing system. And then when the materials come into our store or warehouse, it is part of the inventory system, and we need to value for the raw materials at the year end or on a regular basis. And next, we work on the raw materials. So once we work on the raw materials, it becomes the semi-finished goods or work in progress here. And for those work in progress or semi-finished goods, further processing is required in order to turn them into the finished goods. All these here, raw materials, work in progress, and finished goods, are classified or grouped under the inventory and managed under the inventory system. And for all these items, they must be valued at the year end or on a regular basis. For example, like to say, 6-month basis. And once the finished good is produced, they are linked to the sales system when the inventory was sold. So in this chart or in this table, you can see there is a purchasing system in the purchase of raw materials, and there is a sales system linked to the inventory sold. all these purchasing systems is linked to say, hey, here, purchasing system linked to the accounts payables. And once the account payables was settled, it is linked to the cash system for the payment. And for the sales systems, it's linked to the cash system as well when we collect the money back from the customer. So here, our focus on working capital management is on inventory. An example of inventory system for a handbag manufacturer can be explained as below. First, the production manager decides what items will be produced and checks the amount of raw materials required and in the inventory. So before the production is planned or produced, the production manager needs to check what are left in the warehouse for the raw materials and to see whether they can fulfill the production demand. If not, then the production manager needs to prepare a purchase requisition for the materials to be used, say leather, zips, and fastenings, whatever required in the production of handbag. So the raw materials will be shipped by the supplier, and the goods arrive. They are included in the raw material inventory record. Before they are recorded, the production department need to check and verify all materials are in good condition. And the production department then can raise a requisition for the raw materials to be needed for the production. And the handbags are produced, becoming firstly work in progress, that is the semi-finished goods, and then into the finished goods. The finished handbags are added into the finished good inventory records and then transferred to the warehouse for sale or waiting for sale. And the sales order received, the sales department approved the sales order, and the handbags are delivered to the customer so that handbags are sold, invoice issued, and once the handbags are sold, the numbers of handbags sold are deducted from the finished goods records. So here is an example of inventory system for a handbag manufacturer. And we mentioned here that from the goods received before the process, here the goods arrive and are included in the raw material inventory record, are managed by the purchasing department, because the purchasing department need to process the purchase requisition raised by the production department. And once the handbags are sold, the sales invoice issued, and the number of handbags to be deducted, a record in the inventory system, is also linked to the sales systems. So let's move on to discuss the purpose of organizational control. In this class, we mentioned about the purchase system, the sales system, the payroll system, cash system, as well as the organization, as well as the inventory system. And here are the reason why we have the organizational control of each of the systems. As I mentioned to you before, we have the systems. We should define the objective, what are the outputs and what are the likely inputs, and then we need to think about what will go wrong. So for organizational control is to help to prevent any things happen when what will go wrong. So first, safeguard company's asset. Why do we need to safeguard company's asset? For example, if assets are stolen or damaged, the company will have to spend money to replace them. So it's about the cost and the money. We safeguard the company's asset means safeguard our cash, our property as well. Next, the second purpose is efficiency. And if it is an efficient business, it means that the practices are a waste of the company's money. So we need to ensure the process, the control process or the system need to be efficient enough to avoid any waste of company's money. Third, the third purpose for organizational control is prevent fraud. Fraud means the loss of valuable resources belonging to the company share or shareholders. So prevent fraud means we avoid the loss of valuable resources to the shareholders. And the fourth purpose for organizational control is to prevent errors. Errors can lead to losses in efficiency or a loss of assets. So prevent errors means we improve our efficiency as well as to protect the company's assets. So all these four major purposes for organizational control is critically or is very important to an organization. And this ties in with corporate governance. The good organizational control can contribute to good corporate governance, and the directors are required to introduce a good system of controls to safeguard the company's assets and protect shareholders' investments. So it's quite clear and straightforward. Why do we have a good controls or organizational controls in a company? We just described the systems, say purchasing system, sales system, payroll system, cash system, and inventory system. And the controls are important for each of them. So right now, I would like to introduce one example from purchasing system to show how controls are important. The purpose. Remember, one of the purposes is to safeguard company's asset. So under the purchasing system, the key area that we are looking at is first, ensuring that only goods that have been received are paid for. That means what we order, then what we paid. What we don't order, we don't pay. It's simple. And next, ensuring goods are in good condition. It's about how to store our the inventory into the warehouse. We need to have a lock in, for example, for the warehouse, we need to have a door, and a lock of the door is needed to protect the, to ensure that no goods can be damaged and stolen by anybody, for example. And efficiency. The second purpose is efficiency. For a purchasing system, we need to ensure that the best practice is negotiated before buying. It is a waste of money to spend more than necessary. For example, if the price or unit price is not well negotiated, we pay much higher prices than the market, for example. It means waste of money, which is unnecessary, and it will reduce the profit margins on the batch as well. And prevent fraud. Preventing purchasing staff accepting payments from suppliers to persuade them to purchase from that supplier. Okay, we need to ensure that the purchasing staff is looking for the best interest of the company, not the best interest for himself. So for preventing fraud, we need to ensure the purchasing staff follow through the procedures and guidance properly with a proper segregation of duties. That means another person should monitor the purchasing staff on the procedures in placing purchasing order to avoid any illegal payments received from the suppliers, because the suppliers, say for example, can pay the purchasing staff for some money in order to get the purchase order. And the fourth purpose is preventing error. For the purchasing department, it needs to ensure that the correct amount is charged by the suppliers. There's no errors in the invoices from the supplier. If there is any errors on the invoices, then the purchasing department need to talk to the suppliers and ask for the supplier to reissue the right or the correct invoice. And next, the purchasing department need to ensure that all purchases are recorded, so nothing missed in the record in the system, because if missed or if not correct, for example, the inventory record is also not correct as well. So it deteriorates the overall efficiency of the company or the organization. So the final part in this chapter 12 on financial systems and technology, is automated systems. Automated systems or computerized systems are nowadays used by most organizations with the exception of very small firms. So no matter a large, small-sized or medium-sized enterprises or companies, they all use computerized systems in their operation. Sometimes very small firms are still are using the system as well, the computerized system as well. And for large companies, they will have accounting software especially written for their needs, or here what we call bespoke systems. That means the systems are tailor-made to the large enterprises or companies according to their workflow and way of work. But for smaller companies, they will purchase a standardized accounting package that has been written to suit any company, or what we call off-the-shelf package. So here are two different systems. One is the bespoke system, the other is off-the-shelf package. For large company, they have the resources, they have money to purchase on a tailor-made system suitable for them, for their operations. But for smaller company, because of the cost issue, they can only afford to pay for standardized accounting package or the accounting system package that suits for them. And for no matter it's bespoke system or off-the-shelf system, they have these features. First, uniform processing of transactions. So no matter person A or person B, every transaction will be performed in exactly the same way. So it's no matter they are person A or Mr. B. So either Mr. A or Mr. B, they process the transactions in the same way. The second feature of automated system is lack of segregation of functions. It's the disadvantage to have a system because first, the IT manager, which is the person responsible for the system, and this IT manager has a lot of power because he or she can access all the data within the company. So sometimes the role here will be a bit complex or complicated. For example, there are two persons in charge of IT. Maybe one person is the IT manager, the other maybe the CFO or the CEO of the organization. So for any access of confidential data, the IT manager, he or she can access into it with the permit from the CEO. So it's a control point in order to mitigate the risk of any leakage of confidential information. And third feature is the potential for data to be corrupted easily. Here, an inexpert operator, that is an inexperienced operator, could accidentally corrupt data, and computer files can become corrupted on their own as well. Alternatively, users may input data incorrectly. So in other words, there's a human errors to make the data corrupted. The solution is the IT department need to have a daily backup, for example, of the data and stored it in a separate area or separate server. So once the data is corrupted, the IT staff or IT department can go into another server to restore the data previously backup or previously copied. It helps to minimize the risk of corrupted data. And fourth feature is potential for increased management supervision. Management can monitor the activities of subordinates easily. Exception reports can be used to highlight unusual transactions. So the management can generate a report. See, for example, to generate the trial balances in the accounting systems and to look at any special or very strange transactions in the trial balance. And use of an automated system allows the data to be analyzed more easily in a variety of ways. For example, it would be very time-consuming to produce a report showing how long customers have owed money under a manual system, but very quick using an automated system. So in other words, the automated system can help to do the debtors aging or account receivable aging. The debtor aging is a report show how long the customer have owed the money. Say, for example, if the customer have 30 days credit terms, so after 30 days, it means the balance are overdue. Then there's a debtor aging report showing the customers the balance owned by the customers for how long, say more than 30 days or more than 60 days, more than 90 days. It's just printed in the computer system in a very quick way to do that. So question time. Here are some questions for the discussion in chapter 12 about the financial systems and technology. And first question is, you are given the following extract. The clerk multiplies the hours worked by the hourly rate to determine the gross pay. So what does it exactly describe? Whether it is a system, it is a policy, procedure, or guideline. So remember, we described at the beginning of the chapter 12 the difference between system, policy, procedure, and guideline for this chart or this table. So for this sentence, what does this extract describe? I think you can find the answer by reading through the table again here. The second question, which of these controls relates to the purchasing system? Purchasing system, here we have the table. The first step is requisition, then ordering, place the purchase order, we got the goods received, and we got the supplier invoices, and record the invoices by accounting department and make the payments. So which of the control here relates to the purchasing system? Whether option A, agreeing invoices to goods received notes, or option B, checking the credits, or option C, authorizing timesheets, or option D, keeping the finished goods warehouse locked. So which should be relates to the purchasing system? And the last in-class question is, there's a statement. The primary purposes of control within an organization are to, first, safeguard company asset, second, improve efficiency, and then prevent fraud and errors. Whether this statement is true or false. Okay, remember we introduced the 4 key purposes of organizational control. So whether it is correct